I would like to do a review for the month of January. It's 2nd of February 2026 today. I'd like to talk about everything I did in January and what my percentage gain was, what I feel about my performance, and what I'd like to improve on. I'll start with going to the first trade I took in January. 2026 first. That's this one. And my balance before was 9,720. A lot of losses. Then I recouped. Had a little bit of winning streak. I think one, two, three, four. So 8 losses before I got a win here. And that was 2 days after. Then I kept trading. I did a lot of trading towards the end of the month of January. Lots of losing trades. Lots of positions. Had another losing streak here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It was all on the 29th. That's Thursday. And this was all on Friday. And my current balance, this was the last trade I took, and my current balance is 986.8. Judging from what I can see here, and I've already analyzed this data before, I took a lot of unnecessary positions, most of which the idea was desensitizing or desensitizing exercises. So I wanted to go in and take lots of positions to see how I feel about losing, because I was a more conservative trader, and it felt like this was something I had to do to see what was on this side of trading. My so that is a $148 difference. That is approximately a 1.4 percentage gain on the account from the close. And an average stop was, I think, one of my highest losses. Average stop was around $40. That is $40, $40, $40. Had some huge losses. Average loss was around $40. We had 73 here. Well, average that to 40. Average it to 50. Had 113. Had 86. 50, 50, 50, 100. This was 2025. The average loss for 2025 was higher, as well as the gains. I was using a model. I was using a model in 2025 that allowed a bigger stop of about 100 points, and these ones. Okay, all right. Okay, yeah, yeah. Once, I just say. Yeah, my average stop was larger in 2025, about 100 to 150, because the model I was using allowed larger stops. But this time I was really wanting to see price. I was engaging in sessions. I was engaging in sessions that, or using models that were it was more like a candlestick trading style, where I'm expecting the next candle to run and I'm acting accordingly, or not giving it much room. Rather than this one, I was letting the positions marinate. I'd use marinate. I was letting the positions. It was more of a day trading, and yeah, on average, eh, I averaged, let's say, 70 bucks, and my average win was mm, this one is it is tricky. I would average my win to be around 70 bucks too, or lesser. Not with any average calculator here, but the wins are not. They are large and they could cover the losses. And over time, I was net profitable for January, but they were very small wins scattered over the losses. It was an interesting and exciting way to trade, but it was also stressful. I kept pressing for small scalps, trading at odd times, or say trading before I believe or I know that the market should present some type of setup, but I would anticipate the setup beforehand, get stopped out, and be exhausted mentally to try to participate in the actual thing I was waiting for. So there was kind of a lag in my idea, mainly because I think my experience doing it. I don't have as much experience doing it. So I was micromanaging. The plan for my bias was thin because I was trying to trade the session reversals. Let me give an example here. On this chart, I was watching this chart and I wanted price to at 9:30. I wanted price to close this gap, these orange levels here, and price closed it in the first 30 minutes. That would have been a stressful event if I was trying to take the position, even though I was right about the position, because I wouldn't have been able to access risk. It wasn't a model. It's a model I'm familiar with, but I wouldn't have been able to. But my experience would have not led me to try to hold the position. Then there was a place here where, at the top of this, after taking this high, using January trading style, I would have tried to short the market here just for a scalp, and also seeing it play out without being in it today reminded me of how it was in January, where I would have been too focused on it and want to try to make something out of it, and would have not gotten majority of the move. Even though it was a one-sided move, there would have been too many questions about it in my mind. So I would micromanage. So moving forward, I plan to take trades, one trade a week, 1 to 2 trades a week. Let the let time yield the profit, or see my percentage gain over time, because it helps me prepare for a bias more, familiarize myself with a model. And I'd like to talk about the advantages of the January exercise. It gave me an idea of what I'm comfortable with, what model I like to employ during times that I'm not pushing, or I don't want to see price do certain things. See, even though I was expecting price to close this range, the model won't. The model and my experience because we're too tight here, and I'd like to be in a discount or a premium level for me to put on a risk that I'm comfortable with and expect a move. And if I take a loss in that area, I will be comfortable and confident with that, and also apply the weights and apply the same logic again without being too critical of it. It will also give me time to analyze my state of mind after a trade rather than just jumping back in the markets or being back in the markets, which I think it's important. So think clearly, and it will be easy for me to measure as well. The stats and the KPIs will be easier to measure. Overall, January was a great, insightful week. I'm glad it went how it went. Let me see if there's anything I'd like to talk about. Another lesson I learned was stop losses or losses overall were not as impactful or scary as they made out to be in my mind. And I will be trying this exercise during the year again, just to constantly desensitize myself. But that's it for this January review.